Hey everyone, welcome back. How can Polestar stock recover? Back to $10. Deliveries are up. Yeah, deliveries are up. However, I'm trying my best to get the official numbers from Polestar. I've emailed them, I've tweeted at them. There don't seem to be any reply. So this is my one criticism towards Polestar. I have to speak my mind. We need the official delivery numbers. I can get a few numbers from Mark Lines, but it's not all the numbers and it's probably not 100% correct. I'd rather get the official numbers from Polestar. This is more media press for them. This is more awareness. This is more advertisement for them. So I can write about it, so I can talk about it. It would be benefiting to them, but they don't seem to want to release those numbers. It's my one criticism right now, to be honest. But I wrote a full article on our website. It's quite fun. Everyone seems to be excited to read this article. So I'm going to read this article for you today. But remember, this is our website, a place where you can subscribe to the newsletter. If you want to support our work, hit that subscribe button. I think I send out probably, maybe 2 to 4 or 5 newsletters per week. It all depends. But I try not to send out too much newsletters because no one really likes it, to be honest. So I really try not to. But it is still a huge support if you go over to the website and subscribe to our newsletter to show some support. But I've been talking about this for a while. I believe Polestar share can recover between $10 to $15 this year. Realistically, let's remind ourselves, market is open right now as we're speaking. The price right now, $3.42. I might just get a couple more Polestar share today. But I will explain to you why this company is extremely undervalued. Why the share price is extremely undervalued. Last year in November, the 25th of November, the share price got to $8. That's $2 away from $10. So this is why I'm confident that the share price can get back to, this is one of the reasons why I'm confident it can get back to $10 or $15. So Polestar had an impressive debut on the public market in 2021. However, its share price has dramatically dropped more than 70% from its peak. People like to say I don't talk about the fact that the share price has fallen over 70%. I'm talking about it now. So while I was writing this, I just remember to say this really important thing. Let's highlight it right here. I appreciate and acknowledge the long-term potential of the brand. I do so knowing that the brand is evenly undervalued. Polestar potential is like that of Apple. Both companies share an impeccable sense of design language fueled by elegance and a product lineup to be marveled at. That is true. I can marvel at the Apple lineup, at their products. I can marvel at the Polestar products. Beautiful. This is an example of a Polestar product. That's the Polestar 5. Pure elegance and beauty. If Apple were to buy a company, it's Polestar, Rivian, or Lucid. If Apple were to buy an EV company, in my opinion. Now, in this article, I also included that Apple is the gold standard for a great company with great marketing, great management, and great products. Both are very similar to Polestar, of course. The more characteristic Polestar shares with Apple, the more my confidence rises. And I see a lot of similarities between these companies. And that's what I look for in any given company is great products, great management, great brand. Apple has built a moat. They have an advantage in the market. I'd like to see Polestar trying to do the same thing. A lot of companies, automotive company built a moat, Ferrari, Porsche, Lamborghini, Bugatti to a certain extent. You can build a moat by simply having an advantage in an area where others can't. By having a particular characteristic with your vehicles that have a specific genre. There's specific people that buy your vehicles, and that's a good thing. This is where I break everything down. I did this in my last Polestar video, I believe. I broke everything down, why I believe the company is undervalued and how much money the company could make in the near future. So let's run through this once again. I believe Polestar share can indeed recover sooner than later. The current price of the share is possibly around $3.60. It's actually $3.40 now, but at the time of writing, it was $3.60. And the market currently sits at $7.78 billion. If one were to acquire Polestar as a company at the moment, it would be undervalued at its current market cap. The most important thing is that buyers would have to consider the potential for the company to make purchasing money back within 10 years. So, $7.78 million. Can Polestar make that money back in revenue in the next 10 years? Well, of course they can, and I'll explain why. The incredible thing is that Polestar made $2.5 billion last year. That's in dollars, in revenue. They also delivered 51,000 vehicles. Going into 2023, the company intends to make and deliver 80,000 vehicles, which could see revenue climb between $3 billion to $3.5 billion approximately. The following year in 2024, I presume Polestar will want to deliver 100,000 plus vehicles in 2024. Yes! Now, as an estimate, which would mean that revenue would once again perhaps climb to $4 billion or to $4.5 billion approximately. If this all happens, if my calculations are correct, this means that Polestar as a brand could make between 7 to 9 billion during the next 2 years. That's this year and the next. That's in 2 years alone. The company would be successful at eclipsing its own market cap, the current market cap of 7.78 billion at the current time of writing, as of the 4th of April 2023. That was last night when I was writing this article. Of course, today is the 5th of April when I'm recording, and I'll edit this article today. Now, going ahead into our article, Polestar is an EV brand that delivers elegance and simplified approach, as evidenced by its upcoming cars and its rapid expansion into new markets. The company's latest earnings shows solid progress in forms of delivery volumes, revenue growth, and investment by its parent company, Volvo and Geely. Thomas Ingeloff, CEO of Polestar, is proud of the progress made in 2022. And its impressive teamwork, which enabled them to exceed 50,000 vehicles. That's their global goal at the time last year. Looking ahead into 2023, Ingeloff expects regular fluctuations, but is confident that they will continue to effectively manage supplies to meet its increasing demands for the Polestar 2. Commence first shipment of the Polestar 3 and launch of the Polestar 4 this year. Polestar 4 will be debuted this year, and Polestar 3 will start delivery in Q4 of this year. So it's possible that we could deliver, I don't know, anywhere from 1,000 to 5,000 Polestar 3 vehicles this year in Q4. I don't know. This would be amazing. This would be absolutely amazing. Absolutely amazing, finally. Up until this moment, they've only been selling the Polestar 2. Last year, they sell over 51,000 Polestar 2 vehicles alone. As they add more vehicles, Polestar 3, Polestar 4, Polestar 5, they will continue to sell different variations of vehicles, SUVs, crossover SUV, Sport GT, that will be the Polestar 5. Looks absolutely incredible. A real competitor to the Model S and the Porsche Taycan. So I'm looking forward to all of this for very good reason. Now, if you like this article so far, you know what you have to do. Subscribe to our newsletter. I think it's well written, nice and simplified. So Polestar is a rare exception in the industry, making subsequent progress and showing remarkable execution. Established brands Volvo and Geely provides the company with considerable assistance, including their factories, engineers, and designers, enabling more efficiency products and lowers costs. In comparison to rivals such as Lucid and Rivian, Polestar delivers 51,491 vehicles with a record gross profit in 2022, while Lucid delivered 4,369 vehicles and Rivian delivered 20,322 vehicles. So both Rivian and Lucid are behind Polestar. And that's good. That's the way we want to keep it. I do like Rivian. I do like Lucid as well. I like the technology, I like the vehicles, but I see a lot more potential in Rivian than Lucid right now because Lucid is struggling to make demands. They're struggling to meet the demands, while Rivian is looking to deliver double that number this year. They're looking to deliver 40,000, 50,000 this year, which would be impressive. That's good. So looking ahead, the company plans to launch the Polestar 3 this year. Obviously, that's in Q4. When I say launch, I mean start deliveries. And of course, the Polestar 4 will be debuted this year and Polestar 5 will be debuted next year. So that's quite exciting. Additionally, it's grown its presence in the foreign market, particularly outside Europe, where awareness of the brand remains low. Right now, Polestar is on the tour in the Americas. They're on their Polestar 3 SUV tour of the Americas. They started in New York. Right now, I believe they're in California. And that is good. I love this photograph right here. I had to share it. Just super, super incredible. Just look at that. I want this. I want this. I will have this. I'm telling you. I want this car. I will have this car. I will have this car in a glass garage. Seriously, I will build a house with a glass garage. Like my garage will have a glass door, contrast to my living room. So my living room will be next to my garage, and there will be my garage with a glass door. It'll be some Iron Man stuff. Seriously. Right there, I will put my Polestar 6 Roadster. Yes. I'm not joking. Now, Polestar recently declared its fourth quarter performance, and the results have been remarkable. Revenue skyrocketed rapid 67% year over year and 985.2 million due to the successful deliveries led by the Polestar 2 and expansions into new market. Cost and expenses were managed well, which resulted in a flip from negative 200,000 to a gross profit of 62 million, with a margin being 6.3%. Operating expenses also decreased as SG&A saw only 1% growth, while R&D dropped 37%, leading to an improved year-over-year operating loss of 205 million versus 337 million. Net loss simply narrowed to 262 million compared to the same period the previous year. The compelling forecast for this year, 2023, for global volume is expected to be 80,000, up 60%, owing to the trend of continued success to the Polestar 2 and adding to the addition of the Polestar 3 SUV. Yes, ladies and gents, we're rising and we're not slowing down. In my articles, I tend to add additional articles. These are articles that I've written before, an additional link, and of course, I thank you for reading. I think the articles are written quite well. Obviously, we add a few different articles, some just about cars. I really love this Lotus, and this video is not about Lotus, but I really like the look of this car. And this is an old classic car. You notice something that I realized is that the rear of this car very similar to Bugatti. I think it's the Bugatti Chiron. Could be wrong, but very similar. So I think Bugatti might have taken some inspiration from a Lotus. That's impressive. Lotus makes really nice cars. Thank you for watching. Subscribe. By the way, Lotus is owned by who? Geely, also owning Polestar, also owning Volvo. We're all a family of brands. Thank you for watching. Subscribe, and I'll see you in the next one. Maybe Geely should buy Lamborghini next. I would love that. I would love for Geely to buy Lamborghini next, because I think Lamborghini's potential is far greater than what it is right now. Thank you for watching, and I'll see you in the next one. Peace.